Hi everyone, welcome to MBA Graduate. Today I am going to explain about accounting basics. What actually accounts is. If you start any business like you take any manufacturing unit like pencil manufacturing unit in which you need some raw materials like wood and lids and for colors for painting the pencil, we need these raw materials, right? And after manufacturing it, we have to sell it to the customers who are in need of the pencils. And so we'll buy raw materials and we manufacture and then we sell. After few days, if we want to know what are our actual losses and profits, and we do number of transactions every day, and for few days we can remember the transactions which we had done, but after few days we may forget. So it will become a big problem to us to know what are the transactions we had done. In that case, we should prepare accounts so that we'll come to know what is our actual profit and what our purchases like raw material, and what is the quantity of purchase, and what we have sold, how many pencils we have sold. Everything record will be there so that we can come to know how our business was running. In that case, these accounts is very important. And the purpose of any business is to make profits through customer satisfaction. If the pencil quality is very good, then if the customer is satisfied, then our our sales will be increased automatically and will gain profit. And in business, I already said, as there are many transactions which involves exchange of value, like purchase of goods, and we may sell the goods for cash or credit. If the demand is more and the sales are more, some customers require in credit basis, so that we should be in a position to deliver our products through credit also. Credit in the sense, after few days they repay the amount which we have delivered to them, the products, for the products which we have delivered. And the next is, what is the actual meaning of accounting? Accounting is the process of recording in the sense, we record all the transactions which we are doing in our business, like purchase of raw materials like lids, wood, and colors to paint the pencil. Everything we are bringing, and we are sell after manufacturing, we are selling to the customers, so that we should record everything whatever we had done. And classifying, we prepare accounts based on the transactions, and after that we don't know what actually our sales, what are actually our profits, and what are actually expenses. In that case, we should classify the accounts into ledger accounts, like separate purchases account, separate ledger account, and separate expenditure account, so that we'll get clarify how our business, how many sales we have done, how many what how many purchases we had done. Everything we can come to know by classifying. And then summarizing. After classifying, we'll do summarizing. We'll prepare the balance sheet to know whether we are running into losses, or whether we have, how our actual, the structure of our business and the financial statement we can conclude by summarizing, by preparing balance sheet and profit and loss account. And at the same time, some interested parties will be interested to know how our business is running, like shareholders. So if after that, we should communicate the information to them, actually how our business was running, and by that they can take decisions what any changes to be made in our business. That all will be taken care by them after doing accounting part. And next is bookkeeping. Bookkeeping is the part of accounting and is concerned with record keeping, means everything we should record, so that we do not miss any transaction in the business. For example, if we miss, we have sold hundreds of pencils and we have forgotten to note in bookkeeping. After few days, When we do balance sheet, or when we do balance sheet, we cannot know what has happened, and we do not come to know that we have sold 100 pencils. It becomes a problem. So in that case, everything whatever we had done in the business, it should be recorded, and it is a part of accounting. Only bookkeeping is a part of accounting. And the next is accountancy. Accountancy is a cycle, is a complete sequence, beginning with the recording of transaction and ending with the preparation of financial statement, that is profit and loss. Profit and loss in the sense, whether we have achieved profit or else loss in our business, what what the financial statement, that we can conclude by doing accountancy part. And in accounting cycle, first step is journalizing. Means all the transactions which we had done, we should record in journal entries. And after that, we have to classify them as ledger posting, like separate purchases account, separate sales account, separate expenditure account, and then balancing. After that, we should balancing in the sense, whatever we had done, like ascertainment of the difference between the total of debit and credit column of a ledger account. In the sense, after preparing ledger accounts, we can conclude what is the actual difference between the debit and credit column of a ledger account, but by doing balancing. And then trial balance. This is a summary of a ledger accounts. What is the summary of the ledger accounts? It involves preparation of list showing the balances of each and every account to verify whether the sum of the debit is equal to the sum of the credit balance to ensure arithmetical accuracy. And then trading and profit and loss account. It is prepared, this trading and profit and loss account is prepared to ascertain the profit and loss for the financial year. For the total year, we can conclude what is our actual profit and loss. And then balance sheet, preparation of balance sheet to know the financial position of the business at the end of the financial year, to know how our financial position, whether we are getting high profits or else losses, what is our actual position, we can come to know by balance sheet. Next, branches of accounting. Main branches of accounting are financial accounting, cost accounting, and management accounting. That financial accounting is what we all I said before as if what recording, classifying, summarizing, analyzing, interpreting, and communicating financial transactions and events. This whole process comes under financial accounting. And then cost accounting. So like I said before, uh, we manufacture a pencil, we manufacture pencils. If pencils, the manufacturing cost is high and the selling price is low, then will get losses. In that case, we should be in a position to reduce the cost of the raw material by by researching where we can get low amount high quality wood and colors, everything. If we research, then we can come to know, okay, the place where we can buy high amount, a high quantity, where we can buy. If we buy in high quantity, then the cost will be decreased. So the supplier will decrease the cost and we can buy at low cost, so that we can uh, cut the cost for manufacturing the product. In that case, cost accounting is used. And then management account. Management account is the application of accounting techniques for providing information to assist the management in the formulation of policies and in planning and controlling the activities of the business enterprise. To control the business, how workers are playing role, and the how what everyone in the business, how they are performing their tasks, This all related to management accounting. Thank you so much for listening, and if you have any doubts you can comment me so that I'll give you answer. Thank you. And if you really like the video, please like, share and subscribe. Thank you.